A very good morning, guys. For 3 weeks, one number held this market up 24,000. Every dip found it, every seller respected it. Every morning on this show, we called it as the support. Yesterday on expiry day, that support cracked. The Nifty did not drift, it did not pin, it did not do the quiet range the chain drew for us. It held till above 11:30 and then it just let go straight down through 24,000 like the level was never present over there, and it closed at 23,824, down 279 points, down 1.16% at the low of the day. 7 stocks up, 43 down. And here is the part that matters this morning. The level that was your support for 3 weeks is now sitting above your head, acting as a resistance. The thing you were buying is now the thing you have to sell into. This is the Tanmay Edge. You are listening to episode 67. I am Tanmay Gurtugoti. Let's go. Let me set the board because the close tells the whole story, guys. The Nifty ended at 23,824. The Sensex shed 893 points to close at 76,200. Both down an identical 1.16%. The day low was 23,784 and we closed barely 20 points off it, which tells you there was no bounce throughout the day, no deep buying that was stuck. And look at where the damage was. Technology and metals. Infosys was down 3.4% yesterday. TCS down 3.2%. The IT index, the single worst pocket on the board. Tata Steel down 2.7%. The defense name BL down 2.7%. The SBI 1.6%. Only 4 of the 50 names closed barely in green. The power utility, largest bank, the car maker and the pharma major. This is not a sectorial rotation. This is a broad top heavy sell-off where the heavyweights let the index down. Now the question every one of you should be asking, was this only us or was this the world that was getting sold off? And the answer is clearly the world was getting sold off. Look at what happened overnight before our market opened. Korea fell almost 10% on Monday, a circuit breaker day. On a chip stock rout, the memory giant down 12%. US tech index lost 2%, and it was not just stocks. Gold fell over 1% and slipped under $4,100. Crypto bled. Silver is soft. When everything sells at once, equities, gold, crypto, all in the same session, it is not a story about Indian earnings or Indian policy. That is a global money pulling risk off the table everywhere, and our IT and metal stocks, the most globally linked names we have, took the most of the hit. And here is the proof it was not domestic, guys. On the day the index fell 280 points, the FIs barely sold anything in the cash market. They were net flat, about 18 crore, just a rounding error kind of thing. The domestic funds actually bought about 680 crore. So nobody dumped the stock market in the cash as well. So why did the market fell from when nobody was selling the shares? It came from the futures and from global fear and from the fact that it was an expiry day. So an accelerated negative gamma on the book below that 24,100 level was the trigger point. When the options clock amplifies, every move on a big level breaks. Remember that. So that was the reason we were highlighting 24,100 as the flip level, because it changes how you read it today as well. Now the positioning. The pros first, then FIs, then the crowd. And yesterday, this order is the warning. The pros or the professionals desk flipped short from a small net long to a small net short. The FI desk already heavily short the index at about 2.23 lakh contracts, did not cover it. As against that, they added almost around 6,000 contracts and now stand at 2.29 lakh index short futures, and they did it on every leg. More short futures, more short calls, more long puts, all three legs leaning the same way down. And the retail crowd, they did something opposite. They bought net long almost 1.63 lakh contracts, adding long into the fall, and selling puts is what they have been doing in. So pros short, foreigners deeper short, crowd buying the knife. When the smart desks are pressing, the crowd is catching. You do not want to be the crowd. Remember that, and do not. So let me give you the map for today. The next expiry, that is the monthly expiry on 30th. Spot has closed at 23,824 and it is now just sitting in a specific place. Just below it is 23,800 level is a put support that has been created. Just above it is the wreckage that happened and that 24,000 level on the option board. 24,000 is now the single biggest call wall of the month. About 13.6 lakh contracts are present over there. Read that slowly. The strike was your support. Now it becomes as the heaviest call line, the ceiling or the resistance above us. Below us, the real shelf is 23,500 and 8.5 lakh put wall. That is where the serious support lives now. The PCR is still in the negative territory. Yesterday it was 0.87, today it is 0.78. So we are getting in an oversold region and probably would see some bounce today. And the futures are trading at just 28 point premium. No enthusiasm there either. So here is the one number that makes today interesting. Max pain on monthly sits at 24,000, same level. So the option chain, the place where the most premium is protected, still wants the market pull back towards that 24,000 mark by the month end. That sets up the real tension of the week. Gravity has broken us below that 24,000 yesterday. The chain says it wants to climb back to 24,000 by 30th. So this market has caught between a level it has lost and a magnet that is pulling it back to the same level. The fight is present at 24,000 and which side wins, it decides the next 200 points. And this is the lesson worth 30 seconds because it is the whole trade today. Support becomes resistance. When a support that held for weeks finally breaks, it does not just disappear, it flips. It becomes the resistance. And the reason is human, not technical. Think about everyone who bought the 24,000 dip for the last 3 weeks. Every one of them was told it was the support. Every one of them is now underwater. So what do you do on the first bounce back towards 24,000? They sell it to get out at break even, to escape that trade that went wrong. Their relief is your resistance. That old support is now a wall of trapped buyers waiting to dump again when the market bounces back to 24,000. That is why a broken floor turns into the hardest resistance in the market. And that is why you do not buy into 24,000 expecting it to hold up. It will push you down now. So what about this morning? GIFT Nifty is up about 53 points, pointing to a modest opening but near that 23,850 mark. But do not read it too much into it because overnight US tech index fell another 2%. So the global backdrop has not healed. The one comfort is crude, Brent under $77, cheap and falling, which is genuinely good for our inflation and our rupee. Though the rupee still soft at 94.7, gold under 4100. Korea bounced almost 3% of its crash. Mixed, fragile, not a clean signal that we have. So the plan, and today as there is no expiry, this is an open option, a follow through day. A momentum matters more than the levels. We open near 23,860. The first resistance is 23,900. That is where the selling should happen. 24,000, that is the support that we broke, now acts as a huge resistance, and you sell rallies into it or you wait for it to prove itself. You do not buy it blind. Only a clean close above 24,000 that holds tells you the foreign shorts are covering and the tone has turned. On the downside, we could see 23,800 broken, and the first support stands at 23,700, and the real floor below it is at 23,500. Losing yesterday's low of 23,784, and the path to 23,700 opens up, and almost 23,500 also becomes a possibility. Buyers sell the rallies, respect the broken level until 24,000 is taken back. India VIX is again bouncing back and is trading around 14. Fear is rising but not extreme, so trade it, do not panic it. So Wednesday in one breath, guys. Yesterday the 24,000 support cracked on expiry. The Nifty closed at 23,824, down a percent, led down by IT and metals, driven by global risk off, not a domestic selling. The FII cash desk was flat. The smart desk pressed shorts. The crowd bought the dip. The old support at 24,000 is now the biggest resistance on the board, and the chain's magnet where it expires next week, is at 24,000. So the whole week is a fight at one number. No expiry today, so this is an auction. Sell the rallies and buy the dip. That is the game plan. Call it floor that became the roof. One last thing, guys. Episode 66 graded 3 out of 8. So the pin thesis broke when the floor cracked. Though the break calls landed, full scorecard is available on rupeecase.com. Trade the level, not the opinion, guys. Have a great Wednesday. One broken floor, one new ceiling, one fight at 24,000. Sell the rallies into 24,000. Respect the support at 23,700 and 10 below it 23,500. This was Tanmay Edge. If you found value in this, guys, please share it with one trader friend who needs it right now and where it streams first. So subscribe to Apple Podcast, Spotify, and listen it live on rupeecase.com, and give a rating, guys, and a review if you want to add something to this podcast. See you all once again tomorrow.